Welcome to Fireside with High Chief. I have with me is Mr. Charles Azigbemi. Today is episode 2 for financial investments. So I'm going to let Mr. Charles Azigbemi to please introduce himself to our audience. Thank you, Mr. Azigbemi. You have the floor.
Thank you, Hi Chief. It's my pleasure to be here with you
You're welcome.
at the fireside. Like you already said, my name is Charles A. Azigbemi. I have engineering background and I am also in the financial space. So I work for a company called Daily Capital in Toronto. So where we focus on asset management and also invest in investment management. We manage capital on behalf of investors. So we have few funds that investors can participate in. Um, Apart from that, I'm a father, a husband, um, and I also serve my community. I think that's all I can say about myself.
Thank you so much, Mr. Azigbemi. For my viewer, I want them to understand that you are not getting paid for this service. You are doing it for the love of our community. And on behalf of Nigerians in diaspora, I want to thank you for what you're doing for our community. Thank you so much. So now let's get back to our conversation. Today we're going to really talk about uh, the investments in our community. Last time, the first episode we had, we talked about how to invest and whatever. Today, we're going to really go deep and so that our people will know how to invest and all the troubles, all the benefits that you get when you invest rightly. Today, our first question is going to be, Mr. Azigbemi, how to get yourself improve financial literacy. This is about literacy because most of our people really don't know anything about improving our financial investments. So I hand over to you, please.
So if I understand the question clearly, is how to what our people should do to become financially literate.
Yes,
Okay.
exactly.
Okay.
Yes.
So financial literacy is not different from being literate financially is not different from every kind of education you can get in other field. Whether it's if you want to be a mechanic, you train to be a mechanic, but sometimes you don't always have to, be open a mechanic workshop, but you just have an idea of how your vehicle runs.
Yes.
Then this one I'm going to say is the unfortunate part. Like if we all have bodies, but we really don't know how the body work. So we always run to the nurses and to the doctors to tell us what is wrong with us. But it's our body. But to also be health conscious is trying to learn to see how your body works. Maybe you want to pick up some book to see how these organs are arranged, which were maybe when we are younger, when we are in high school, we are taught biology and things like that, so we have an idea. So being financially literate is also trying to understand how finance work and how your finance work and how the system of finance work. So to be financially literate is also to go through the same route that you took to get to where you are now. You've gone attended different schools but just that this one has to do with you. I'll give you a very short story. When I was about 12 years old, my father, I went to the parlor, we call it parlor in the village.
Yes.
So he has this 20 naira note and he was stretching the edge and he keeps stretching the edge because it was squeezed. So I was playing outside. When I came back, he was still stretching the note. And I said, Baba, why are you stretching this money? So he kept quiet and looked at it and said, if you take care of money, money will take care of you.
Wow.
So if you are going to make that quote, if you take care of money, we take care of you, make sure you quote my father. His name is Mr. Azebe Michael Agboinfo.
Wow.
If you take care of money, money will take care of you.
Yeah.
Then you quote it as a baby Michael Agboinfo.
I'm going for okay. Thank you
So,
so much.
so to be financially literate, the first thing you have to do is to educate yourself, not once, continuously, because the financial system is very dynamic. Things change. Even a single speech by Joe Biden can rattle the whole economic system. If the federal, if anybody from the central bank make a speech, the central government make a speech, it rattles the system. So you educate yourself continuously. How do you do this? Read books. There are many books. You have a lot of them. You have them free online. Read books. Start with basic one. There are many books you can read. For example, the one by The Money Makeover by David Ramsey. You can start with Read That Poor That by you know Robert Kiyosaki. Pick up some book. Read even basic newspapers. You see financial matters being discussed there. So it helps you to get some background on how finance work and how system work. You're not going to get it in one day, but as you continue to do it and you listen to news, if you look in 680 News, if you're in Toronto, you see every 5 minutes there is a news about the market. You start listening to something like that. You can take a short course. There are many short courses you can take, maybe online. If you go to Google Coursera, they have so many courses now. You can take a 1 day course on financial literacy or about finance. So you can take it on your phone just to get used to it. Then listen to podcasts. Like for example, what a high chief is doing is very valuable. So you can listen to podcasts like this that talks about finances. Then you can start asking questions. You can be sure to ask questions. There are many podcasts, but like this is one of them. Then another thing you can do is try to understand and follow basic finance concepts. There are basic financial concept means you have to learn like budgeting. For example, you earn money at the end of the month, or you want to earn money at the end of the month. Take a piece of paper and budget and say, okay, this is how I want to spend this money, or this is how much is coming, this is how much I will spend, and this is how much I will save. So learn budgeting, saving, investing, and debt management. So you don't have to have all the money before you can save or invest. Learn to know. Some people say, "Oh yeah, especially we are very religious." No, somebody will come and say, "I want to give testimony. I don't just know where the money just came. I just bought this car." It's a lie. If you know, my other brother used to make joke when we were younger. He used to say that you say that if that you don't know where the money went, the money you earn, you don't know where it went. It just leak away. There is a you have hole in your pocket. There is no hole anywhere. If you take your piece of paper, you write down all the item where that money went, you see that what my father said, you didn't take care of the money. The money didn't take care of you. So if you actually wrote them, you see that you will be able to account for all of them, because spirits, they don't spend money. So no spirit takes anybody's money. So try to learn this basic finance concept of budgeting, saving, investing, and debt management. One of the reasons you don't know where the money went, because it went to the Jewish pocket, it went to the Italian's pocket, is because they charge you high interest rates on the amount of money you borrow, and it's on auto debit. So when the money come at that date, they will take it. So this principle, learn it. Another one is try to set financial goals. You set short-term goals, you set long-term goals. Short-term goals can be emergency fund. You want to contribute to an emergency fund. I think we'll be able to talk about that one later.
Okay.
Paying specific debt that are maybe either high interest or there's the one that are small. We'll talk about that one also. Then saving, then planning for your vacation. You plan, these are our short-term goals. Anything you can accomplish within 1 year, they are short-term. Then you can also plan long-term goals, which will include like, saving for retirement, buying a home, funding your education. But these goals, when you set them, they must be smart ones. They have to be specific. They have to be measurable. They have to be what you can achieve. They have to be relevant, and they have to be time bound. You can't say, okay, I set a goal. We don't know when it will be accomplished. No, you have a time that it will be accomplished. Then you create and maintain a budget. So when you create that budget, okay, this is what I want to do. This is what I want to spend money on. This is how the income that I want to earn. This is how I will spend it. When you create it, maintain it. I know it's very difficult for especially Nigerians and Africans. The reason that being that, oh, I didn't plan to buy, there's going to be a Shoebi. Somebody just died because, our in Asia, they say that, oh, Gbenbere. So let's say something happened in emergency. Okay, you had to do a Shoebi and you didn't plan for it. So you're going to take money from where you did not plan. So these are things you can become disciplined in. If you didn't plan for it and you don't have it, tell them, "Well, I really love to support this program, but I don't have money to buy the SRP. Do I bought before?" You stick to your budget, because if you don't stick to it, tomorrow the same people you are trying to please today will be looking at you when you are suffering. So you stick to your budget, categorize them, maintain them, and adjust them when needed. But let the adjustment not be catastrophic to push you back from your plan. Then you build emergency funds. There are certain things that are emergency that will happen. For example, people can lose their job. So, for example, health issues can happen. There's, for example, anything can happen. So it's always advised that you have between 3 to 6 months of your saving. That's what the financial experts suggest. 3 to 6 months of your earning, you leave it somewhere. Make sure it's always there in case of any emergency. If you lose job, maybe you take around 3 months to get your job. At least you're still living all right the way you were living when you were working. Then if when you get your job, then you refill it. So one of the ways you can do this one is for you to save regular, not that you just create it one year that, oh, you heard from high chiefs podcast that you should have emergency for them. Look, all the salary this month is going there. We are not eating. No, you save it. You do regular saving by making maybe you are doing an auto saving debit from your account for your emergency fund. Then another thing is you manage your debt wisely. Debt is one of the killer. Interest rates, you see, when the investment people come to you, they tell you, when they want to tell you how much you will earn. Say if you invest 1,000 naira, $1,000, they won't tell you, okay, you're going to make $100 at the end of the month. So you make 10%. A lot of you don't even understand what the percent is, because not all of us were good in maths, and it's not your fault. There are other things you are good in. So when you start talking percent, you say, because now we are probably, we won't say, I don't understand what this percent means. What does it mean? Always smart people ask every question, no matter how small it is, if you don't understand. So when somebody says, okay, I'm going to give you need this money now, I'm going to give you the money, and I'm going to charge you 20% annually. It means that if you divide that money into 5 places, taking one portion every year. So that's very high. So your debt, when you have debt, manage to pay out your debt faster. So the high interest one, pay it faster. Avoid unnecessary debt. There are certain debt that are not necessary. Not all debts are bad. We will talk about that one eventually. Then understand the terms. When you are doing contract, to come and sign this agreement, you just give me a pen. I believe it in the name of Jesus. It's a lie. Jesus is not really interested in whether you are signing contract or not. Jesus is interested in your development. That's why he went to school. Make sure you read the contract. If you don't know how to read, if you don't understand the contract, get somebody. to look at your contract because you sign it. Invest in your future, protect whatever you already have, protect it, monitor your credit. Now seek professional advice, like all the CFP, CFA, investment advisor. I'm not investment advisor. So all these type of people seek that they are professionals. They will guide you, that is insurance people. They will guide you and they will help you in your investments. So sorry, Felix, I'll call you. So that's what I would say on and the other one on literacy. Apart from education, your education will help you to realize some of these things that I've mentioned also. But read books, talk to experts, budget, save regularly, and invest.
Okay,
Manage.
thank you so much, Mr. Azegimi, for that. And talking about protecting your investment and whatever, we look at rich people, they are very good at it. The poor people are also very good at it. My question will not be, how do people, even when you are not rich, how do you turn your investment into profit?
Well, you don't need to be rich to turn your investment into profit, but turning your investment into profit can make you become rich. Now, the question is, how do you turn your investment into profits? Well, that's what we discussed the other last week. Talk about um, how to manage your investment management. That's one of the things we discussed last time. So, turn your investment, making profitable investment has to do with you know steps. We didn't delve into them last time, but now we'll look into them more specifically.
Yes.
So it's not it's we'll start from what we just discussed on financial literacy. If you become a little bit financially literate, the next thing that will happen is you will now be able to start looking at when you have an investment, you'll be able to start looking at the investment to see, is this investment a good investment for me to put money, or is it not a good investment? Is a good investment to leave behind? So the first step to profitable investing is doing research and due diligence on that investment. So it's not just on the investment per se, but also those that are managing the investments. Because investment does not just produce money by itself, it's the management of the investment that produces money. So when somebody provide a product for you, you have to look at it. Is this particular product a good product considering where we are in the market now? So financial literacy will help you to know, the investment trend, the market trend, things like that, and what is happening. Then research and due diligence on the product is important. I'll use the general one. Real estate. Somebody come to you and say, okay, this real estate is a good product for you to buy. Buy this real estate. If you rent it out, eventually there'll be some growth on it. Then you can earn some maybe capital gain and things like that at the end. That's all true. Then you have to look at it. Which type of market are we now? Is this real estate in a physically sound structure? How is the rental environment like? How long am I willing to carry this product? So if, for example, I lose tenant for 3 months, can I carry it? Can the rent from this project, from this property be able to carry my mortgage? If it can carry my mortgage, how much will I get monthly after paying everything? That will People do that, but there are certain aspects of this type of investment that people don't look at, because where you make 500 naira every $500 every other month, every month after paying everything, but you don't look at, have you budgeted for in case the toilet broke, in case the pipe broke.
Yes.
In case, so you have to make all those budget, and after putting money aside for all this in protecting this asset, then you can say, okay, I'm making $50 every month after that.
Yes.
So you have to be able to invest profitably. What everybody that make profit should do, that will make profit should do, is to research what you want to invest in, and make sure and do due diligence on the management that is managing it. That's one. Two, like we said the other time, even Solomon said that invest in seven or eight things because you don't know which one will do well.
Yes.
So don't put your money. It's okay. I like real estate. Real estate doesn't fail. Real estate fails. So don't just invest in real estate. Diversify your portfolio. Invest in real estate. Invest in stocks. Invest in bonds. Invest in, commodity. Commodity? There are many other assets you can invest in, so that in case one is not doing well, the other one may do well, because there is no guarantee that they will do well. So you diversify your portfolio. And when you are investing for profit and for wealth creation, you invest for the long term. You don't invest for tomorrow. I just, okay, if I put, it's not like, those days, put money to one thing, they say, I just draw it down. When you draw it down, the money will come out. Sometimes it doesn't come out. You still do it. Go to casino. So investing is not like casino. You always invest for the long term. Another thing, when you are investing, that's okay. Oh, because you listen to High Chief podcast, and that guy said that you should watch the market. Then you are listening to the radio, and they said that, look, things are really going to go bad. You just rush and go and catch your investment. That's not the way it works. The person there is giving his own opinion that may be right, but things goes up and come down also. But it goes up again. It is how much. So, but you watch it, but always invest for the long term, not for the short term. You have to understand risk management. Every investment faces different kind of risk. So you try to study to see, okay, what risk is associated with this investment? How much risk am I able to take? If I lose 5%, 10% on this investment, is it okay for me? So those will also help you to decide what type of investment that you will invest in, and also how much you can hold on. So risk management is critical. When you invest, what the rich people do is they reinvest the profit. Remember last time we spoke about
Yes.
compounding, the
Yes.
power of
Exactly.
compounding. Compounding is reinvesting the profits. So if you read one book called, I used to call it, I forgot, it's a small book. It's is it The Millionaire Acre, something like that.
Mm.
He said you always eat your great grandchildren in finance. So when you invest, you make profit, reinvest the profits. Then what the profit that is reinvested produce, that's what you should be spending.
Wow.
So when you are spending that one, your profit will always come, but you can spend that one.
Yes.
That's why how a lot of wealthy people, sustain their wealth. You eat your grandchildren, but not your great grandchildren, not your grandchildren. Then keep your cost low. When you are going to, because every investment you do, the investment advisor, the investment management, the portfolio management, and the company, they're going to charge fees of various kinds. So the fee is part of your profit.
Yes.
So if your fee is lower, then more is going to profit and more will be reinvested. So you try to keep your fees on your investments low. You monitor and rebalance your portfolio as you go. So once in a year, or as the frequency that your advisor will suggest, you have to look at your portfolio again to say, okay, this is here, this one is doing better than this one. And based on what is happening in the market, this may not be very good. So you can rebalance your portfolio. So they will rejig it a little bit. Then the last one is, okay, you should stay informed. Always listen to the market, listen to read book, see what is happening in the market, follow the market trends. So all these they will help you to invest profitably. I'll quickly summarize: research and due diligence, portfolio diversification, investing for the long term, understanding risk and risk management, reinvesting the profits, keeping your costs low, then monitor and rebalance your portfolio at the frequency that is suggested by your advisor. Then, keep stay in tune with the market. So these are these items that may help you to build wealth and invest profitably while you invest profitably.
Thank you so much, Mr. Azigweme. You can see we really don't have much time anymore. We only have less than 5 minutes. My
Mhm.
last question for you will be this, talking about the risk management.
Mm.
What are the financial myths that will ruin your investments and retirement dreams?
There are so many myths that's in the market that people talk about. But myths are always very good things. Myth creates culture, creates religion, help manage many things. But financial risks are very dangerous, and myths are very dangerous if you follow them. So these are things that people say, that can easily jeopardize your investment and retirement plan. So one of them is that you need a lot of money to invest. It's a myth. You don't need a lot of money to invest. You can invest today based on what you have. There are ETF that sell for pennies. There are, you invest what you have. Don't wait until you have all the money before you start investing. Number two is, investing is only for the expert. It's not. Anybody can invest. There are many platforms that now allow you to invest by yourself. You have all the many tools like robo investor. You have index fund that will allow you to, invest even in the stock market. For example, you have your self-directed RRSP. You can invest in the stock by yourself. Another thing is I can time the market. I can just, okay, now I won't start now. When the market is just going up, I just put money, I just make $1 million. It's not going to happen. You can't time the market because the market involves you. So we are part of the market. It's a whole, trying to time the market, it's extremely difficult. Some people do it. There's a strategy like that in trading, but it's extremely difficult for people like us. I can lead to poor decision making and you can lose a lot of your money. People wake up, look, I want to invest in Forex. They say that you can just get leverage it 1,000 times. I put the money and it just go on 1%. I just make 1 pip or 10 pip. You have to remember that there is a whole flaw in Royal Bank. These are very highly trained people. They are still losing money. So how do you think are you that are just in your back in your basement and you just click it and just don't try to time the market? Another myth is that debt is always bad. Debts are not always bad. There are some good debt, there's some bad debt. Recognize them. You have mortgage in your house, that's good debt because you have low rate and and uh, and uh, and and your property is also appreciating. So that's not a bad debt, but high interest debt and unnecessary debt that people take debt to go borrow money to buy clothes, buy shoes to look good. That's not even that's not wise. It's an unwise decision. So not every debt that's on debt, good debt, that's on bad debt. If I borrow money from you at 5% and I invest it at 10%, I'll still pay your 5%. I'll still have, maybe 3% left after paying tax on it. You see, that's a good debt. So, but very careful, debt is very dangerous. Retirement saving can wait. That's another myth. I'll wait until this is I start saving for retirement. No, you start it now. And when you want to start it with the benefit of RRSP, 401k, RES, TFSA, Roth IRA. Then, as for young people, especially that for home, there's one in Canada that is really good. It's called First Home Saving Account for home buying. So I think uh, our time is up, but there is one that is really important that your CPP, your Social Security, and your pension plan at work will be enough. No, those are meant to subsidize your investment. Don't That's another myth that is there that you don't have to do anything. Then the CPP will just pay me. No, you will live very poor at your retirement age, which is not very good. So you subsidize it with other investments. Right, Chief? It's my time up.
Yeah, you can run it up. We're good.
So, like we have already said, if we take care of money, money will take care of us. If we don't take care of money, money will not take care of you. If you say money is not important, money will consider you not important. If you say what is money, how much is money, then you will not be able to buy the premium that you're talking about. So we must spend time to look at money because money may not be everything, but money is significantly important and has value because it helps us maintain our daily, and maybe our retirement life eventually. So I'll stop there.
Yeah, thank you so much, Mr. Azibimi, for everything you said today. I think for me personally, I've learned a lot today. And then next time we're going to deal on because we seems to have issues, especially from the diaspora. Majority of them are self-employed.
Mhm.
So we're going to talk about how they can save for their retirement and what they can do to save because majority of them really don't know what they're supposed to do until they turn 65, which will be too late. So that is the next one we're going to be talking about. Thank you so much, Mr. Azegbe.
Thank you, hi Jeff.
You're welcome.